Hi, everyone. This is Will, aka Dr. Financial Literacy, your local political economist. If you're looking to be an authorized user, you want to improve your credit, you want to reduce your credit card debt, you're looking at interesting to purchase a home or to understand the HELOC, then my team is a team that you need on your side. You can give us a call or email us, and let's see what we can do to help you. All right, so getting back into it, we're going to go through parts 33 through 38. These are not necessarily parts of the contract, but this is how I'm organizing them so that I can present them to you. I'm sharing my experiences with you in terms of a recent HELOC that I received that helped me to pay off a 30-year mortgage in about 1 to 2 months. All right, so let's go ahead and get started. So the first 33, address certification. This basically talked about the property and where it was addressed, where it was located, and a mailing address, and the certifying agent. So that was a straightforward page. Authorization, credit count, signatures. This included my signature in terms of authorizing further credit checks and further credit accounts. I'm going to read this paragraph. With their signatures below, the borrowers hereby are approved and designated check signers in connection with their home equity line of credit agreement with the lenders. Checks will be honored when signed by any one or all of the designated signers. If the borrowers are in default under the home equity line agreement with the lender may request that any unused checks be returned. So for this particular HELOC, I will be using checks. And from what I understand, they're going to send me 9 checks and then I can reorder them. There are HELOCs that are set up in terms of having a debit card, a Visa, or a MasterCard. This was the one that I was able to attain based on my debt to income ratio, based on what I had going on with my business and what I prayed for just to get out of the gate to improve my situation. So definitely there are some different ones that are not necessarily based on checks, but this one is principally based on me using checks within the HELOC velocity banking system. Next is a consumer credit score disclosure. So basically this talked about just notice to the applicant, notice to the home lender about the consumer credit reports that they will be using, pulling, how I can get some information about that, where that can be located in general. Okay, so that was just a consumer score disclosure. Within that also, it provided the consumer credit scores from Equifax Credit Information, TransUnion Consumer Disclosure Center, and Experian National Consumer Assistance Center. Now, these are the 3 major entities. They've been called bureaus, they've been called agencies, they've been called companies. So it's could be somewhat confusing for the individuals. They pulled my credit and got the middle score I think they were starting from, but the 3 scores that they pulled was 701, 681, and 712. Now, when I went into some other companies like Wells Fargo, Bank of America, Navy Federal, the credit profile or the credit score of me was between maybe 750 to 785. So this is one of the things that when they do pull your credit, although they're saying that they're pulling, I think the consumer model, they also may have models that they're running in the background that we don't have access to understanding in general. In fact, when I asked them about the model that they will be using, they said that that's proprietary information and they can't reveal it. So there's a lot of stuff that's still going in the background. The next is the Federal Equal Credit Opportunity Act. Again, as a political economist, that's one of the things that I do. I study government and I study various acts. This pertains to the Federal Credit Equal Opportunity Act prohibits creditors from discriminating against credit applicants on the basis of race, color, sex, religion, marital status, age provided by the applicant. As we know in general, some groups have been historically discriminated against through public policies. So this is a letter. You would hope that it's working. We hope that it's working. Okay. The next section is the Georgia HELOC recipient receipt of HELOC disclosure. Because the property is in Georgia, they made sure that they included disclosure that's required by Georgia. And I just wanted to read this, listen real good what it states. This acknowledgement is being delivered to you pursuant to Georgia rules and regulations 8011-1001. Each of the undersigned borrowers hereby acknowledge receipt of a copy of the required disclosures under state and federal law for a home equity line of credit. This acknowledgement is not intended to be, nor shall be construed as an expression of intent to continue with the borrowing application. All right. Now we have the application disclosures. This talked about basically fees that were associated with the application. As I mentioned earlier, I paid about $23.60 in total closing costs. $23.60, which was about 5% of the loan. So my total closing costs were $23.60, or about 5% of the loan. This included they didn't charge me for an application fee. They did not charge me for an appraisal fee. They charged me $68.50 for credit report fee, third party floods fee, $5. I was charged $62 for a title search, $300 for a settlement fee, $30 for a loan policy, $10 for recording, $25 for recording fee, and transfer and taxes, $158. And a part of this was points, which would help to bring down the interest. And points are generally sometimes payments ahead of time or profits for the lender in advance. There are no third-party fees, other third-party fees, no third-party fees. And then this was my signature. All right. And lastly, pursuant to Georgia Code Section 711014 provided by the company to the borrower, me, on the address. This section requires that we inform you that if you fail to meet any condition or term of the documents that you sign in connection with obtaining a mortgage loan, you may lose the property that serves as collateral for the mortgage loan through foreclosure. So, yeah, if some things are wrong, if I made some misstatements that they may deem or seem illegal or the term, then I could lose my property through the loan, the mortgage loan through foreclosure. So yeah, that's one of the cons of getting a HELOC. You're putting your home up for collateral, but so it can be a loan that's already paid off, or it can be a loan that's you're currently paying on. The HELOC represents the equity or so-called equity in your home. For the home that I'm using for equity, the price did not appreciate significantly, maybe like 1 or 2% over the year. But when COVID hit, that thing bumped up to probably 150% in valuation. That's what really allowed me to get more so the HELOC in general. So unfortunately, with the COVID situation, it has increased home affordability and home values. All right, well, that's another section again that we went through: address certification, authorization, consumer credit score disclosure, Federal Equal Opportunity Act, the Georgia disclosure applicant, and notice to me from the state of Georgia that I could lose my home in the foreclosure process if some of the documents may not have been correct or legally binding, or I made some statements that were not correct. All right, well, thank you very much. I really appreciate you stopping by. And again, this has just been a series of videos giving you my real world, not theoretical perspective on a HELOC and how it is used. All right, thank you very much for stopping by. Have a great day.